Welcome back to the portfolio update videos. This is a big one for me as my two combined stock portfolios have hit an overall value of over 50,000 AUD. That is made up of the 20,230 USD in my stake portfolio, which is just over 31,000 AUD and is up over 15% now, which is around 2,688 USD. And my Vanguard Australian portfolio, which is sitting at around 18,800 AUD. This is a big moment for me, as similar to when I first hit 25,000, I'm now halfway to the $100,000 mark, and my savings has really been compounding in terms of my dividends and my capital gains as the stock market has bounced back. Today I just kind of wanted to go through where I've been investing my money, what's got me to this point, and my outlook going forward. So since hitting this milestone, I did want to go through some of my old videos just to kind of show the journey and how long I've been doing these videos and how my portfolio has grown over the years. So you can see the first video I did was when my portfolio was around 13,000 AUD, and that was probably close to 2 years ago. You can see I switched to USD eventually before changing it back to AUD, but you can see the bumpy road as I continued to invest, weeks where it went down a little bit. And these are all my portfolio update videos that I've been tracking. You can see the ups and downs, and I've consistently been investing money. You can see how far it fell there, and then me investing even more, and the portfolio is growing. But as of lately, especially the last kind of year, that's when my portfolio has seen the most growth, because you can see it drop down from 21,000 to 18,000, and I've just consistently been putting in, even when things were falling. I've been putting more money in, and I've been able to hit different targets, like here 25,000. That was my first quarter. So I was really excited for that one. And then I continued to put money in, grow it, getting it up to 30K. Soon enough, I closed it on the 40,000, which was around 2 months ago. And then I've continued to grow now to the 50,000 it's hit. So it's been really exciting. My goal is still to hit the 100,000 that you see people like Charlie Munger and that speaking of. And yeah, that snowball effect has been happening. I mean, you see the dividends are getting a lot larger. In terms of gains, they're a lot larger. Losses are also the same. But it is quite enjoyable to see the work that you put in terms of saving that extra money instead of spending it, and kind of seeing some results of my portfolio growing. And that's one of the reasons I've done these videos, is to kind of track and hold myself accountable. So this is just a quick little snapshot of my different videos that I've made. Starting off with the portfolio that kicked everything off is my stake portfolio. So I've been investing in this since I was around 18. I'm now 21 years old now, so it's been a bit of a period now where I've learned a lot. So when you kind of look at the last 3 years, I bought all through this, got to see nice capital gains, got all the way up to like 20% in the green, and then I experienced this downturn. For a young investor, I mean, I was pretty happy that I didn't just sell out and realize the losses for a lot of it. I tried to invest in, and I've continued to dollar cost average in kind of no matter how VOO is going. Again, it was one of my original positions. It's a position I plan on keeping for a very long time. My goal is to always keep it around 50% of my US portfolio, and that's what it's sitting at now, around 48%. So I'll keep investing into it, dollar cost averaging. My average share price is around 390, so it's been a lot lower, but that's kind of what happens, I guess, when you're buying the ups and downs. And I'm currently up around 5.85% on it. So the returns haven't been amazing over my time of investing, but again, I'm looking at like a 10-year, 20-year outlook, and it's kind of just keeping good habits. So I currently own 23 shares, and I plan to continue to grow that for as long as I'm investing in this portfolio. And it's also my biggest dividend payer, especially due to the size, because it's getting close to $10,000 in equity. So that will be another big mark if it can hit 10,000. Will make the portfolio look nicer as well. So one of my next big positions, actually my second biggest individual holding, used to be my biggest before Microsoft overtook it, but it was actually my first buy, I believe. So that is Apple stock. So Apple stock's getting close to that 190. I did actually do a recent purchase into it, which I'm obviously not going to purchase in now. The price has shot up very high. So I did try to buy in a little bit when it dipped, close to that, just under that 170 mark. But yeah, it's been an amazing performer for me. I mean, you look, my average share price is around 140, and that's with me buying in at these higher prices. So, I mean, when I was initially buying it was under around 120. So I was really happy with those prices. And it's something that I believe in for the long run. My total equity is around nearly 3,200, and I'm up around 35%. So again, this is a position I'm up around $834 USD. So might not be a massive amount. I mean, I'd like to have around $10,000 in these portfolios, like you see in these positions, like you see some other people online. But as a younger investor, I've just kind of been putting little bits of money in where I can, and kind of just hoping on that snowball effect. Apple did actually just pay out its dividend, so I got around $4 or something, but it's not a stock I definitely invest in for the dividend. So I guess I'll just keep that and put it into something. But yeah, really happy with Apple, something I'm going to hold long term. And yeah, I mean, in terms of my investments, like I said, it's probably been one of my best ones in terms of returning 35%. That's with me buying in at higher prices, just the dollar cost average. Next is Amazon. Amazon's an extremely small position. I haven't sold it yet. I'm up around 7%. This position has been through so many ups and downs since I've invested in it. I thought I was getting in at a decent price. I ended up selling a lot of my position. But yeah, it's up 50% this year, and it feels like every time I see it, it's either up or it's down in terms of like my position. And it's just kind of sitting there now. Not too sure what I will do with it. Maybe sell out of it. But yeah, it's just another one in my portfolio I haven't actually had for very long. My next position is a staple in my portfolio. It's a business I love personally, something I like going into, something I'm happy to invest it in, and it's actually down 3% today. But that is Costco. And Costco is the story behind why I invested into Costco was because I was really heavily weighted into tech positions. So if you've watched any of my old videos, or if I put anything up, I was invested into Apple, Microsoft, Amazon, Meta, the QQQ, S&P's even. S&P is very tech heavy. So I was really heavy into tech, and I was like, I need to diversify. So I watched some videos, I did a bit of research, I looked at companies I like, that I enjoy, and Costco was one that popped up, and it had really run up. That was when it had done this, and I was a bit nervous, but yeah, I've been happy with the investment. It's up around 17%, so I'm up around 173 USD, and my average share price is around 494, and the cost now is near 580, so it's done good, but I only have 2 shares in it, so my equity is around 1,200. But yeah, it's a great company. I'd love to buy more, and it's probably a little high for me right now. Pays a little dividend, but yeah, really happy with that investment, and it's not something I see myself selling just yet. Next is Google. Used to be a bigger position of mine. Not really much of a focus at the moment. I know it's had a really strong year, like Amazon as well. I'm probably kicking myself a little bit for not buying the two over a year ago. I was a bit stingy with, when I look back now, where I kind of allocated my funds probably wasn't ideal, like my sale of Meta, things like that. But I guess this is all learning experiences, and I was speaking to someone, and I was like, I'm happy I'm having these now as a younger investor compared to in the future. So the more I can learn on this now, even like you go back and look at any of my old videos, I used to invest in stocks like Alibaba, and I sold out of that and took a loss, but those losses kind of taught me to be a bit smarter and get a bit of a better idea of what I'm investing in, and maybe hold them for a bit longer. But yeah, my Google position's now only down to 3.87 shares. I remember before the stock split, after the stock split, everything's kind of thrown me off with this in terms of what the average share price is and stuff. I used to have an idea. Now it's kind of, after it's been divided into small pieces, I just don't follow it as much anymore. But my average price is around 135, and the stock is sitting at 136. So really not much of a change. I'm pretty much just flat, and that's kind of where I've been on it for a little bit. Same with Amazon. Might potentially move out of it. I don't know. I still believe in the company long term, but it's just a small position on mine. So if I don't grow it, it's just kind of sitting there. Next is another one like Costco, JP Morgan. So I was really heavy into tech, needed to diversify a little bit, and I decided I would put some money into JP Morgan. I looked at all the banks. I was actually in Goldman Sachs for a while. I sold that for a profit, and when I looked at all the banks, I thought the most stable one, best long-term one, is probably JP Morgan. They almost got that too big to fail kind of narrative going on, so it was something I decided to invest into. I don't know how long I'll have it for. My average share price is 140, and it's sitting at around 151 now, so I'm up around 7.5%, and I have 8.32 shares, so I have a little bit of a position. It's a bit bigger than my Costco position. I'd love for my Costco position to be bigger than my JP Morgan one, but yeah, it's just over 1,260 USD. Pays a little dividend. Again, that was one of the initial reasons I bought this stock, but now I'm looking at it, I don't really care too much about dividends in this portfolio compared to my Vanguard one, because again, the broker I'm with takes a portion of it, and I just don't really care too much about dividends in my US portfolio as they're not that big, especially compared to my AUD one. So maybe I'll move out of that position. But one I recently invested in and I've been really happy with, only kicking myself is because I wish I bought more, is McDonald's. So I had to look around. I was looking at this stock for ages. I thought it would be a great, like Costco, a great staple. And then this stock continued to drop and it had this big drop off here. I was kicking myself I couldn't get in at these prices. I was able to get in around here. You can see my average share price is 256 and I thought I was maybe a little late. But it has shot back up to 276 now and is up nearly 8% in the short time that I've owned it. So I really wish I got my position to over $1,000. Looking back now, I wish I could have sold some of my JP Morgan and put it into McDonald's, because this is a company I believe in long term. I mean, I did a video on it. You can go anywhere in the world. Even when I was traveling other countries, it's always busy, it's always full. There's always new locations popping up. The menu's different all around the world. They know their target audience. It just always seems like there's a McDonald's somewhere. If you need something, it's 24/7. It just seems like the best option in terms of, I don't see it going anywhere. And again, like JP Morgan, it pays a pretty good dividend at 2.42%, but that's not why I'm invested in it. I have 2.8 shares, but I'd love to grow this position. It's something I was tossing up now. I was like, even though it's shot up, it's still down over the last 3 months. But yeah, I wish I could have got it to over $1,000 in that time, but I'm happy I did invest, and it's not something I see myself selling out of anytime soon. Last is my biggest individual holding, so that's Microsoft. So my Microsoft position is up nearly 40%, and it's been amazing for me. Like I said, Apple was my biggest individual stock by far, and then Microsoft was kind of on this little downturn here, and I was watching more videos on it, and I was kind of looking into it a bit more. And everything with Microsoft, the subscription models, the whole business model of it, like Costco, I thought was really good. In terms of recurring revenues, I thought the management seemed like it was going all well. People, whatever I saw was always good. And I figured I'd love to invest in Microsoft because it's like Apple, like many of the other positions in my portfolio. I emphasize, I don't see it going anywhere anytime soon. I've got 9.5 shares and my average share price is around 271. So you can see the average share now is 376. So about $100 extra. And I'm up basically $1,000 USD. So that's pretty nice. Again, like I said, I would have loved to have invested more into this position, but I just didn't have the funds at the time. And I was really heavy into tech, so I didn't. So that's one thing I kick myself about, is not investing more into Microsoft, because you look at those 3-year returns, nearly 80%, like that's amazing. If you're let's say that's like 26% per year, so that's really good, especially 2022. I did try my best to invest as much money as I could. I didn't have as much money at that point coming in, but every bit I could, I did invest into these stocks. So I'm just trying to reap the rewards now that the stock market has rallied and come back. And like Apple, it pays a little dividend, but I don't really care too much about that. I'm more there for the capital gains. But yeah, this portfolio is up 15%. So across my videos, I've been down on this portfolio, down 20% before. I've been up, I've been everything with this. So it's kind of taught me the ups and downs. I haven't been selling out. I've just kind of been steadily investing. And now that I'm earning more money and more consistent, I've been in my job for a longer, I can kind of budget it a bit better to put more money in. So as I continue to grow this portfolio, but I also transferring AUD to USD. And at the moment, the exchange rates aren't ideal. Like it's like 154. So every one USD is like $1.54 AUD. So it's not as strong for me at the moment, but I still want to transfer money in there and just kind of grow this. So if I was to sell this and transfer it to my Australian stuff, I'd get a lot of money, but me transferring to USD, I'm just not getting as much for my dollar at the moment, it feels like. So that's not nice, but it is what it is. The reason I invest into the US portfolio is basically just the return side. Just if you look at it, it's the biggest market by far. Everyone wants to invest in it. They want their company to be listed there. It's always got money flowing through it. The returns have been really strong, and that's kind of my focus for my portfolio. Is I just want companies that aren't going to go anywhere. Staples that I can look long term, but not like old ones like Intel or something like that, or IBM, but like ones that are innovating and have a strong business model, like your Microsofts, like your Costco, and then all of that in the VOO. So just to kind of balance it out from my individual holdings and still having a market S&P 500 tracking ETF. My next portfolio is a lot more recent, so it's my Vanguard portfolio. So the goal was to get this to 20K before the end of the year. I'm well on track, so should hopefully be able to get it there. And I've basically, this portfolio shot up this year. So I'll go cover my Excel spreadsheet where I track everything. But the reason I invested into this Vanguard portfolio, well, one reason was I wanted to diversify a bit away from my stake portfolio, because a big chunk of my net worth was tied up in this. And I was a bit, not nervous, but I wanted to just diversify. So I invested in my Vanguard portfolio. Again, I understand, I don't think my returns on this portfolio will match what they will on my stake portfolio, but I'm not too worried, as I'm just trying to split it. And this portfolio gives me a lot of big amount of dividends as well, which is one reason that I invested into this. So whilst I focus on capital gains in my stake portfolio, my Vanguard portfolio is a lot more dividend orientated as well, because we get franking credits over here. So it means the companies pretty much pay tax on it. So just stop double tax pretty much. You don't have to, which is nice. Not financial advice, speak to an accountant. But yeah, so it's nice getting these. I mean, my last one was nearly $240, and that's paid quarterly, so 4 times a year. So as I continue to grow this, and that was when my portfolio was a bit smaller as well. So next year I can hopefully get close to like $1.5 thousand in just dividends. So that's really nice. Helps me investing, helps me grow the positions, and I don't have to do as much. So currently I have the 3 positions. VHY is Australia's shares high yield ETF. So this basically just tracks the biggest, basically like your dividend high yield players. So I'll pull up the details. So these are some of the holdings. So you've got the Australian giants like BHP, which takes up just over 10%, Combank, National Bank, Woodside, ANZ, Westpac, Macquarie, Telstra. So basically the big players that you know are kind of the staples in Australia. So pretty much you'll notice the 3 positions, or the 2 positions, 2 of them are very similar in terms of their holdings. But yeah, so this is a big focus on just dividend payments. In terms of returns for it though, I'm not too sure. That's one of the reasons why I was kind of looking whether I should stay in this or should I just sell because it's a small position. It's only $663, and then just put it into VLC, which is by far my largest position, with 154 shares sitting at over $11,000 now. And I'll show you a bit more about this. This tracks pretty much the top 20 largest companies here in Australia. So again, like I said, pretty same. It's just a bit more concentrated. So it's got all the big ones, but they've just got bigger positions. So it's not as diversified. And the reason why is I was originally investing into pretty much the one that tracked the ASX 200, basically our equivalent of the S&P 500. And I thought it was almost too diversified, almost like I believe in the biggest companies here in Australia a lot more than I believe in some of the smaller ones in terms of investment and how I think they'll perform. Maybe I'll miss out on some gains, but I just kind of want the stability as well. So obviously in a more diversified portfolio, you'll get more stability, but I was happy with just investing in the top 20 and then hopefully bigger dividend payments, better companies, and hopefully better returns. My last position in my Vanguard portfolio is just nearly under 7,000, and it's VGS, which is Vanguard's index international shares. So whilst this portfolio was focused on Australian stocks, I also wanted to get some exposure into international shares as well. So you can see this year's 1 year returns has been way better than my other 2 stocks. And that's because, like I said, I think international shares just seem, from what I've seen, I just believe they'll have better performances than Australian shares. I'm not saying Australian shares haven't done well. In some positions they have. But for example, I work at a bank and I get some shares through the bank and stuff, and they've been pretty flat for the last few years and things like that. So I still wanted to have exposure. So this has a lot of the big American holdings. So some of them I'm already invested in, like Apple, which is 5%, Microsoft, basically near 5%, Amazon, Alphabet, Meta, Tesla, all the big players. And it's got a bunch of holdings, like nearly 1,500 pretty much, but it's all the big staples. And pretty much I don't see, this is about as diversified as you can get in terms of internationally. And so I think this will give me a nice little balance in regards with all my other positions. So currently, yeah, I said I want to get that to 20,000. I'll be well on my way. So yeah, I've only opened and really been funding this portfolio much this year. So this is more of like a 1-year trip. So this money could have gone into my stake, but I just wanted to keep it separate. This is USD, that's AUD. And I'll show you the Excel spreadsheets I've been tracking. So I have a bunch of other Excel spreadsheets that I use for like personal use and stuff. And I thought, why don't I track my portfolios on there? So I track like net worth stuff and everything, but in terms of just my investments, this helps kind of give me a little bit of a view of it. Maybe I'll make it a bit prettier, but this is how I kind of look at it sometimes. So you can see my goal was to get VOO to take up 50%. It's currently a little bit short of that at 48, but I'll continue to invest. Doesn't need to be exactly 50%. That doesn't really change anything. It's just kind of the principle. And then you can see I just have the 3 positions in my Australian portfolio. And the goal is to kind of make VLC take up 60%, might even be 50% in the future. And then the other 2 take up the other remaining portion. And I've also tracked kind of how they've grown. You can see they've grown a lot as the stock markets has also bounced back this month and have gone up, but I've been steadily investing in all of them. And you can see it's nice for myself because more than just the numbers, but you can see the progression and kind of how they've gone up. My goal is still to hit 100,000. So if I can hopefully get there, if I could get the end of next year, I'd be over the moon. But it's a long journey. But the earlier I can get started now as a younger investor, the better, because hopefully more compound interest and better long-term results and building better habits. So I'll continue to track these and show videos of them to both hold myself accountable and just if anyone wanted to view it, just for future reference. Again, the main purpose of this video was I've hit 50,000, so it was a bit of a milestone for me to tick off. So I've also just finished my semester, so I'll hopefully have a bit more time for more content. But yeah, like I said, I kind of just do these videos to keep myself accountable and keep tracking it. So if I ever want to look back, like I showed earlier, I can kind of look at those old videos and see where I was, give myself a bit of motivation. But yeah, that was it for now. And then hopefully next week I'll do another video. And also like closer to the end of the year, I'll do a bit of a wrap up on how my portfolio has performed over the year and how everything kind of went. But that's all for now. Cheers.